So 3 weeks ago, the authorities tightened requirements on margin lending, which is why we've seen the correction in the Shanghai Composite, which is a very welcome thing. Some profit taking is also naturally to be expected after a 50% move last year. But the authorities also clarified that they have no intention of trying to make the market go down. That's not their intention. In fact, they said they wanted to promote the healthy growth of margin lending. I think they simply don't want to see a repeat of 2007. That doesn't mean the market won't go up. It just won't go up as much as it did last year. So I don't think, because Morgan Stanley is not a forward-looking company, they will include Shanghai this year. But the authorities are very keen that they do. So I believe they will work with the authorities this year to iron out whatever is missing to include Shanghai. And at some point in 2016, it will be included in the Morgan Stanley Index. The Financial Times Index is more forward-looking, and I think there's a very good chance that it will include A-shares, Shanghai A-shares, when they meet in September.
We talk about 4 sectors: healthcare, internet, new energy vehicles, tourism. Is more like a new economy stock. So after the correction for the last few months, we're still positive on these sectors. I guess this time around is very similar to the last few times. There will be a bunch of IPO coming. The frozen amount estimate will be 2 trillion. So that I think near term will be affect the sentiment for the Asian market as well, because a lot of liquidity will come from secondary market to the prime market, because IPO market has been quite attractive for Asian investors because they have been performing quite well since it developed trading. So I guess there will be some short-term pressure for Asian market. Wednesday there's a cut, but I guess market reaction was typically is buy on facts, buy on rumor, sell on facts, because it's already checked for last weekend there will be a triple out cut. But I guess at the end, as Mark had mentioned, I think investors, especially Asia, they are worried about the margin lending restriction, though, and also the recent IPO. So that negative factors outweigh for the triple out. The next catalyst is on the NPC meeting, which is on the early March. So definitely there will be more growing interest in the China market again, especially Asia. For H-shares, I guess investors are more rational in a sense that they look at the recent data as being quite discouraging. But I guess China has been more of the policy market. So if the policy comes again, for you will see different kinds of supportive measures. So I think market interest will go back to China again.